In this video, traders, we're going to look at preparing for a change in market conditions. So if the market conditions change, how can you be prepared so that you know exactly what you're going to do and you're not caught wrong-footed? Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so this is a follow-up from a previous video I did. We talked about changing market conditions, and actually it's a question from members. I thought it's a great opportunity to do a video about it and kind of keep it loose. This is the kind of thing that you don't think about when things are going well, or if you're focused on one particular strategy or method, you don't think, hey, you know what, things could change dramatically. And you know, one thing I mentioned in the video is, it really pays to be prepared for when conditions change, because we can have a setup or strategy that works very well. Like at the moment, guys, for example, you know, I'm filming this in, where are we, mid-July 2020. You know, tech stocks are just pushing hard, and so the strategy of buying tech on dips is working well, but we don't know when it's going to stop working, you know, so we milk it for as much as we can. We try to extract as much out of the market as we can, and then when conditions change, we pivot, and we don't stubbornly try to do that. A mistake I hold my hands up to, guys. You know, when I first started, I had a strategy that was working very well. Market conditions changed and I just didn't know what to do. I didn't know what to do. I was wrong-footed. I kind of tried it a little bit more. You know, I just was kind of lost and went, now what? You know, I feel like I'd found my edge and I was making money and my decision-making process was good and my discipline was good. But now the strategy wasn't working, so I had to reinvent the strategy. And you know, learning from that and recognizing actually being a little bit prepared for changing conditions, you know, not taking your focus too much away from what's working now, but being prepared and saying, you know what, how do we, number one, spot the conditions are changing? Number two, what can we start to do if they do change? Now listen, don't confuse changing conditions with normal market moves. Like for example, you know, let's say we're in an uptrend, aggressive uptrend, and we get a heavy down day. That's not changing conditions. That's just normal market moves, guys. And we might not have had it for a kind of a 20-day period or 10-day period, but it's still, you know, normal moves. What a change in conditions would be is going from, you know, aggressive bid to, you know, just stagnating and doing nothing, or, you know, very volatile or very quiet. Kind of in the last video I did where we talked about this, you know, I'm going to get some illustrations of what you might see on a chart. Anyway, one of the first things to do is to scroll back and see what the different conditions are. So in the market you're trading, so if you're trading Forex, if you're trading currency, if you're trading indices, whatever, scroll back and just see, you know, what they look like visually, because you know, if you're a new trader as well, you've not been exposed to it. And listen, why would you have been if you just started trading, you know, relatively recently? You've not seen different market styles where, you know, we had really narrow ranges and it was very hard, or we've had very extreme ranges and stuff. So you know, you go back and just see exactly, you know, what it looked like, and then you start to study the move size. You start to study the themes, you know, and by themes I mean, you know, do we have like a 3-day rally and a 1-day pullback? You know, do we have breaks to highs out of the range that tend to fake? Do we have, you know, really aggressive down moves, really aggressive up moves, and then stagnation? You know, is there a theme there? What's the average true range? Just studying and just getting a feel for what's happened in those conditions. And a good example would be to go to a quiet condition. So, you know, reasonably active, to okay, what happens when we start to contract in volatility, when we start to contract in range? How does that play out? Well, actually, you know, for example, we very rarely get more than a 2-day move in one direction, and then we retrace. And so you can start to then build a strategy around that, because you start to note down setup ideas. Great example just then. Okay, in a quiet condition, range-bound market, we tend to get, you know, a 2-day move, and then it just peters out. And so maybe there's a setup or strategy that's either, you know, looking for the exhaustion on the 3rd day or end of the 2nd day, or jumping on the ignition on the 1st day. So you start to think, rather than perhaps in the current conditions, you might say, you know what, we get a 2-day move, the 3rd day is a buy day because we're going to get another 5-day move. You might think, okay, well, actually to flip on its head and look for the reversal on the short. So different ways of thinking about it. The fourth thing is research the type of trades, setups from books or from videos, and I've got a couple on the channel as well, guys. We talk about setups for, you know, mean reversion and bear market, and there's a few you know, different courses and stuff that you can do. But just start to think about, you know, okay, if we do go into a quiet environment, I want to be trading mean reversion. What's a good mean reversion strategy? What's a good indicator to help guide me with mean reversion? What's a good strategy in high volatile conditions? What's a good strategy in a choppy market, a low volume market? And starting to use those, you know, let someone else, don't reinvent the wheel, you know, steal that for want of a better word, and then reframe it and rewrap it and readjust it to suit your style and the hours you can commit and all the time frames, etc. So that's one way of kind of doing it once you've figured out what you're looking at. And the fifth thing is a kind of slightly different approaches. Rather than changing strategy dramatically, so your strategy might be, you know, aggressively buying pullbacks in a strong trending market, works perfectly, and you say, well, actually no, I'm going to have to now sell exhaustion moves, buy exhaustion moves within a range. Completely different strategy, completely different skill set, you know, my scaling and stuff. You might say, okay, which markets may well exhibit the tendencies from the market that I've been trading? So if you've been trading aggressively buying pullbacks, you might say, okay, well, maybe I can't trade this index that I've been trading successfully, but maybe that will work well in oil or in gold or in a currency pair, because they might move out of sync with each other. So when equities go quiet, maybe commodities go on fire, maybe currencies start moving. So rather than just focus on the one market, another option, a kind of fifth option, is to think which markets might be a viable switch. On something that happened to me when I was trading very, very aggressively London Stock Exchange shares, my switch was over to futures because just the volatility was contracting in the specific sector I was trading went quiet. You know, the edge went, and so okay, why don't I move over to something that's equally as aggressive and it is moving, you know, a decent amount. I've got the same kind of tape reading skills that I was using on those shares on the level 2 on the futures market. And then, you know, so you kind of, you know, mesh together some of the skill sets you've got, you change markets, but you're still using a similar type of strategy rather than sticking with the same market, but flipping the strategy on its head. So there's a couple of kind of ways to look at it, but it definitely pays, guys, to just be thinking about, you know, how would you trade that environment? I'm not saying this should be the forefront of your mind. No, you know, forefront of your mind is to extract as much as you can from the market, manage the risk, do all the other good things as well, while the conditions are there and while it's working for you. But once you've kind of got that nailed in, allocating a little bit of time a week just to think about, okay, if I started trading reversion, what would that look like? What would it look like if we had an extreme volatility move? What would it look like if I started trading stocks rather than FX? What would it look like if I moved from futures to this, to that, to the other? You know, and just thinking, because then you haven't got the double whammy of, wow, your revenue suddenly stopped, your account balance has stopped growing because the strategy's not working, and I don't know what to do next. You've actually got the bang of, okay, it's not working, right, now I know what my plan is to move forward and to get the back on the throttle and get that revenue curve back up again. All right, guys, take care. I'll see you in the next one. Keep your risk managed. Bye-bye.